All right, so let's trade those winter blues for some, some tropical vibes. Today, we're diving into your research on Thailand real estate investment. You sent over some interesting excerpts from an article, and looks like you're really keen on Phuket.
Phuket is definitely a popular choice and for good reason.
Yeah.
Thailand's tourism is booming, the economy is steadily growing, and those beaches are truly postcard worthy. But for savvy investors like yourself, it's crucial to understand the nuances beyond that paradise facade.
Okay, so let's unpack this. What makes Thailand a smart investment right now, beyond just, the allure of the exotic?
What's fascinating is that Thailand offers diverse opportunities. The article specifically mentions the region of Bang Tao in Phuket, where prices per square meter have surged by an impressive 15% year over year. And that's driven by high demand for luxury villas and beachfront properties.
15%. Now, those are some numbers that catch my attention. So Phuket for those seeking luxury, got it.
Mm.
But what if my taste leans towards something a bit more diverse?
Well, the article also highlights Pattaya, particularly the Jomtien region, as a prime investment area. It attracts both local and international investors with a good mix of properties that cater to a range of budgets.
Interesting. So Pattaya offers a bit more flexibility for different investment strategies. Now, what about Bangkok? I know it's a major hub, but I've also heard whispers about economic challenges. Is that something to be concerned about?
That's a really important question. The article does mention that Bangkok is facing some economic headwinds. This raises the question, does this present a risk, or is it an opportunity to buy low and potentially see higher returns down the line?
A risk or an opportunity. It's like a real estate riddle.
Hmm.
Okay, before we get too lost in the possibilities, let's address the elephant in the room. The article mentions this foreign quota thing. Does that mean I can even buy property in Thailand as a foreigner?
If we connect this to the bigger picture, Thailand does welcome foreign investors, but there are some specific regulations. The foreign quota essentially means that foreigners can own condominium units, but only up to 49% of the building's total area.
So I could own a condo, but not a whole building. That makes sense. But what about land ownership? Is that even a possibility?
When it comes to land ownership, things get a bit more complicated. The article states that foreigners generally can't own land outright. However, there are leasehold options available, which essentially function as long-term rental agreements.
Leasehold, interesting. So while outright land ownership might be off the table, there are still ways to secure property for an extended period. Makes sense. Now let's talk about the money. The article highlights the potential for rental income in Thailand. Is it really the rental gold mine it's made out to be?
The article does paint a promising picture, particularly in tourist areas. It specifically mentions Phuket, Pattaya, and Chiang Mai as hotspots for high rental yields, especially for those short-term stays. We're potentially looking at yields of 7–9%.
Okay, now those numbers have my attention. Passive income from a tropical paradise. Tell me more. But I also imagine there's more to it than just listing a property and watching the cash flow in.
You're right to be cautious. While those yields are attractive, we need to consider the flip side. Short-term rentals require more active management, dealing with tenant turnover marketing and potential maintenance issues. The article also mentions long-term rentals, which offer more stability but potentially lower yields. It really boils down to your investment goals and how hands-on you want to be.
So a trade-off between high reward, high effort, short-term rentals and stable, potentially less lucrative long-term rentals.
Got it. What's really piquing my curiosity, though, is this mention of guaranteed rental programs. What are those all about?
That's where things get particularly interesting. The article highlights that some developers, like Scope Langswan, offer these programs that guarantee a fixed rental income for a set period. It could be a more hands-off way to invest.
A guaranteed income. That sounds almost too good to be true. What's the catch?
As with any investment, there are always caveats. It's crucial to thoroughly vet any developer offering such a program, understand the terms and conditions, and ensure their track record is solid. Okay, so proceed with caution, but it's certainly worth exploring. Now, the article also touches on another intriguing option, off-plan properties. What's the story with those?
Off-plan properties are essentially those that are still under construction or in the planning stages. The allure here is the potential for significant savings, often 20–30% below market value. It's like getting a pre-construction discount.
A discount is always enticing. But I imagine there are some inherent risks involved with buying something that doesn't yet exist.
You're absolutely right. The article cautions that delays and even incomplete projects are a real risk with off-plan properties. Vetting the developer's track record and financial stability becomes absolutely critical here. You need to be confident that they can deliver on their promises.
So high reward potential, but also higher risk. Got it. Are there any specific off-plan projects mentioned in the article that stand out?
There's one that caught my eye. 4 rai of land for sale in Thalang, Phuket, near an international school. The article suggests it holds prime development potential, especially considering the proximity to the school. Imagine the possibilities.
Okay, you've definitely piqued my interest. From luxury villas to off-plan opportunities, we've covered a lot of ground here. But there's one more property type that screams Thailand to me. Those luxurious beachfront villas. Are those just aspirational dreams or are they actually smart investments?
It seems like you're drawn to the high-end market, and the article confirms that demand for luxury properties in Phuket and Koh Samui is indeed driving significant appreciation. Plus, there's a strong rental market for these high-end properties, particularly among tourists seeking a lavish escape.
So it's not just about owning a piece of paradise, it's about tapping into a lucrative market. Tell me more about Koh Samui. What kind of investment opportunities are we looking at there?
The article specifically mentions Koh Samui's Play Layam Soi 7, which offers both freehold and leasehold options starting at THB 14,800,000. That's a significant investment, but it speaks to the exclusivity and potential returns in the luxury market.
THB 14,800,000. All right, we're definitely talking high stakes now. But here's something I hadn't even considered before. Visa advantages. The article mentions that investing in certain properties can grant residency perks and long-term visas.
That's an intriguing aspect that adds another layer of appeal.
Yeah.
Imagine living in Thailand long-term, enjoying the culture, the food, the beaches, all while your investment grows. The article highlights the Thailand Privileged Long-Term Visa, formerly known as the Elite Visa, which offers multiple tiers with varying benefits, ranging from 5-year to 20-year visas.
Wow, 20 years. So it's not just about financial return, it's about a potential lifestyle change. That definitely adds a whole new dimension to the equation. But let's be practical for a moment. The article outlines the actual process of buying a property in Thailand, and it seems a bit, well, complex.
It can certainly feel daunting, especially for those unfamiliar with the Thai legal system. The article really stresses that getting legal advice from experts who specialize in Thai real estate law is absolutely essential.
So this isn't something you'd recommend tackling solo.
Engaging a reputable lawyer experienced in Thai property law can save you from potential pitfalls and ensure you're protected legally.
It sounds like an essential investment in peace of mind. Okay, we've covered a lot of ground here, from the alluring beaches of Phuket to the complexities of the buying process. But there's one more trend that I want to touch on before we move on. Sustainability. The article mentions that eco-friendly developments are gaining traction in Thailand.
That's a significant trend worth exploring. It seems eco-friendly features like solar panels, rainwater systems, and energy-efficient appliances are no longer just a niche interest, they're becoming mainstream.
I love that. It's great to see sustainability taking center stage in real estate. But what are the benefits for investors beyond just the feel-good factor?
The article highlights several key benefits. First, these features can significantly reduce running costs for both owners and tenants, leading to lower utility bills. Second, as demand for sustainable living grows, eco-friendly properties are likely to command higher resale values.
So it's not just about being environmentally conscious, it's also a smart financial move. It seems like Thailand's developers are catching on to the fact that sustainability isn't just a trend, it's a smart investment strategy.
Exactly. And this aligns with a global shift towards more responsible and sustainable living.
Okay, we've explored the allure, the hotspots, the legalities, and even the sustainability aspects of Thailand's real estate market. But there's one crucial piece of the puzzle we haven't addressed yet: financing. How do people actually afford to invest in this tropical paradise?
That's where we'll pick up in part 2 of our deep dive. We'll delve into the world of financing, exploring the options available to both local and international investors.
All right, let's dive back into the world of Thai real estate. In part 1, we explored the allure of places like Phuket and Pattaya. But now I'm really curious about the nuts and bolts of actually owning property there. The article you sent dives into different ownership structures, which seem pretty crucial to understand.
You're right, the ownership structure is a fundamental aspect of any real estate investment, especially in a foreign country. The article outlines 3 main types: freehold, leasehold, and fractional ownership. Each has its own implications for foreign buyers.
Okay, let's start with freehold. It sounds pretty straightforward. You own the property outright, no strings attached.
In essence, yes. Freehold grants complete ownership with no expiration date. The article highlights this as the most secure form of ownership in Thailand, offering peace of mind and strong legal protection.
So freehold is the gold standard, but I have a feeling there are some nuances for us foreigners, especially given that foreign quota we discussed earlier.
You're spot on. While foreigners can own condominiums under freehold terms, they're still subject to that 49% ownership limitation within a building. Freehold is attainable, but not always easy, especially for larger investments.
Right, that pesky quota. So freehold is an option, but perhaps not always the most accessible. What about leasehold then? How does that work in Thailand?
Leasehold is more akin to a long-term rental agreement, though with important legal distinctions. The article states that foreigners can lease property for up to 30 years, with the possibility of 2 renewals, effectively securing it for up to 90 years.
So instead of owning the property outright, I'm essentially leasing it for a very extended period.
Exactly. And importantly, these leasehold contracts are registered with the land department, providing legal recognition and a degree of security. It's a popular route for foreigners seeking longer-term involvement in the market.
It sounds like a good alternative to freehold, especially if navigating that foreign quota seems daunting. But are there any downsides or risks associated with leasehold ownership?
Well, you don't have full ownership control. You're limited in what you can do with the property without the lessor's consent. And while 90 years seems like a long time, it's not forever. Those lease renewals aren't guaranteed, so there's a level of uncertainty there.
Okay, so freehold offers security and control, but leasehold is a practical alternative with its own pros and cons. Now, what about this third structure, fractional ownership? That one sounds a bit more unique.
Fractional ownership is an intriguing model. It's essentially owning a share of a property, often managed by a hotel or a specialized property management company.
So instead of buying a whole condo, I could buy a portion of one or perhaps a share in a resort or villa. That makes sense. But if I don't have a full title, what's to stop things from going wrong?
That's where due diligence and research are paramount. The success of your investment hinges heavily on the management company's reputation and the overall performance of the property. It's crucial to review their track record, financials, and the specific terms of the fractional ownership agreement.
So thorough research is vital, got it. But why would someone choose fractional ownership over, say, buying a condo outright? What are the advantages?
It can be appealing for different reasons. The article points out that fractional ownership offers a lower entry cost, allowing investors to participate in high-value properties they might not afford individually. Plus, it's a hands-off approach. The management company takes care of maintenance, tenant finding, and day-to-day operations.
Ah, so it's ideal for someone seeking a hassle-free, passive investment. It makes sense. Now, before we move on, I keep thinking back to something you mentioned earlier, the need for legal expertise. The Thai legal system is unfamiliar territory for me. Honestly, it feels a bit overwhelming.
It's understandable to feel that way. Navigating legal systems in foreign countries can be complex. The article really stresses that getting legal advice from a specialist in Thai real estate law is absolutely essential.
So hiring a lawyer who knows the ins and outs of Thai property law is non-negotiable.
Precisely. They can guide you through the intricacies of contracts, ensure your interests are protected, and help you avoid costly mistakes. Think of it as an investment in peace of mind and a smoother transaction process.
All right, a good lawyer is on the list. Now, let's switch gears and talk about Thailand's booming tourism industry. We know it's a major economic driver, but how does that directly impact real estate investment?
That's a key point. The article dedicates a significant portion to this very topic. Essentially, Thailand's thriving tourism sector fuels a constant demand for rental properties, making it a particularly attractive market for investors seeking passive income.
Makes sense. Millions of tourists need places to stay, and that translates to potential income for property owners. But is this demand consistent throughout the year, or is it mostly seasonal?
That's where it gets interesting. The article highlights that this demand isn't limited to peak seasons. It's fairly consistent year-round, especially in popular tourist destinations like Bangkok and Phuket.
So year-round rental income potential, that's a big plus. Now, are there specific areas mentioned in the article that are particularly attractive for investors looking to capitalize on this tourism boom?
The article calls out a few hotspots. Bangkok, with its vibrant city life and cultural attractions, consistently draws tourists. And of course, there's Phuket, famed for its stunning beaches and island lifestyle. The type of experience you're seeking, will influence the location that best suits your investment goals.
So Bangkok for city vibes, Phuket for beach bliss, got it. But it's not just about picking the right location, is it? The article mentions something about partnerships with international hotel groups. What's the story there?
That's a fascinating aspect of the Thai market. The article suggests that partnering with established hotel brands can be a strategic move for investors seeking more security and a streamlined approach.
I'm intrigued. How do these partnerships work and what are the potential benefits?
Well, imagine tapping into an existing network and infrastructure instead of starting from scratch. These partnerships often come with guaranteed rental returns, mitigating some of the risks associated with fluctuating occupancy rates. Brands like Wyndham and Accor, which have a strong presence in Thailand, offer investors the opportunity to leverage their reputation and global marketing reach.
So it's like having a built-in tenant base and management expertise. That sounds pretty appealing, especially for someone new to the market or looking for a more passive investment strategy. But are there any downsides or things to be cautious about with these partnerships?
It's important to remember that no investment is completely risk-free. While these partnerships offer advantages, it's crucial to thoroughly research the specific terms of the agreement, the management fees involved, and the hotel brand's track record in the market.
Okay, so due diligence is still key, even when partnering with big names. Now, we've talked a lot about the positives of investing in Thailand, but I want to get a realistic picture. Are there any economic factors that potential investors should be aware of?
That's a critical question to address. The article does delve into economic considerations that investors should be aware of. It's not all sunshine and beaches. Informed decisions require understanding the broader context.
Okay, lay it on me. What are some of the key economic factors at play that could impact real estate investments?
Firstly, the article highlights Thailand's overall economic stability. It mentions a steadily rising GDP, supported by strong exports, and, of course, that booming tourism sector we've been discussing.
So a stable economy is a good sign, right? Less risk of sudden market crashes or major economic downturns.
Precisely. Economic stability usually suggests a positive environment for real estate appreciation and a lower risk profile for investors. But there's another economic factor to consider: currency exchange rates.
Ah, yes, the ever-fluctuating world of currencies. How does that play into Thai real estate investments, especially for someone like me who's dealing with a different currency?
It's an important consideration. The article points out that the Thai baht can fluctuate against major currencies like the US dollar or the euro. These fluctuations can impact both the cost of buying property, a stronger investment. Baht means higher initial investment and the potential returns when you sell.
So it's like a double-edged sword. A favorable exchange rate can make your investment more affordable, but an unfavorable one can impact your profits down the line. It sounds like monitoring currency trends is a must for any savvy investor.
Absolutely. Understanding currency fluctuations and their potential impact is part of making informed decisions and managing risk. The article even suggests exploring hedging strategies to mitigate these risks, especially for larger investments.
Hedging strategies. That sounds a bit complex. Maybe we can touch on those later. But for now, let's move on to other economic factors. What about government policies on foreign investment? Are they welcoming or restrictive?
That's a key area to understand. The article explains that Thailand has implemented policies specifically designed to attract foreign investors, making it easier for them to own certain types of property. However, as we've discussed, restrictions do exist, particularly surrounding land ownership.
Right, that foreign quota keeps coming up. So a mixed bag, but overall, Thailand seems to be encouraging foreign investment, albeit with some limitations.
Exactly. And encouragingly, the article mentions a projected growth in the Thai economy, which is expected to further fuel housing demand in the coming years.
Ooh, increased demand usually means higher property values, right? That's good news for investors.
That's the general idea. The article attributes this projected growth to several factors: increased government spending, rising private consumption, and potential interest rate cuts.
So a combination of positive economic forces creating a potentially lucrative environment for real estate investment, it's all starting to paint a pretty compelling picture.
It certainly seems that way. But, as always, it's crucial to stay informed, monitor market trends, seek expert advice, and make decisions based on a holistic understanding of the factors at play.
Wise words. Now, let's revisit those visa advantages we touched upon earlier. The article delves a bit deeper into this, and I have to admit, the idea of living in Thailand long-term is very appealing.
It's a captivating aspect, isn't it? The possibility of combining a sound investment with a lifestyle change. The article highlights the Thailand Privilege Long-Term Visa formerly known as the Elite Visa, which offers various tiers with durations ranging from 5 to 20 years.
20 years. Wow, that's a significant commitment. What kind of perks come with these long-term visas? Is it just about residency or are there other benefits?
It goes beyond just residency. Think VIP treatment at airports, expedited immigration processes, even access to government concierge services. The program is designed to make living in Thailand smooth, convenient, and enjoyable for foreign investors.
Okay, now that sounds like a pretty sweet deal, but I'm guessing these visas come with a price tag, right?
They do. The cost varies depending on the chosen tier and duration. It's an investment in itself. But for those seeking long-term residency in Thailand, it can be a worthwhile one, providing access to a comfortable lifestyle and attractive benefits.
So it's like investing in a lifestyle, not just a property. But I'm curious, do all property investments qualify for these visa benefits or are there specific requirements?
That's where it gets nuanced. The article states that certain high-end property projects offer residency perks as part of the investment package. It's not an automatic benefit for all property purchases. It often depends on the development, the investment value, and the specific visa program.
So careful research is needed to identify those projects that offer the visa advantage. It's not a one-size-fits-all scenario.
Exactly. And navigating the complexities of visas and residency can be tricky. Seeking professional advice from immigration lawyers or specialized visa consultants is highly recommended.
Once again, expert guidance is key. Now, I want to touch on something that really stood out to me: the growing trend of sustainability in Thai real estate. We talked about eco-friendly features, but the article goes deeper into the benefits of green investments.
It's a trend that's gaining momentum globally, and Thailand seems to be embracing it wholeheartedly. The article goes beyond just the environmental feel-good factor and highlights tangible benefits for investors.
I'm all ears. What kind of specific benefits are we talking about? I know we mentioned lower running costs, but is there more to it than that?
The article emphasizes that eco-friendly properties can significantly reduce energy costs, leading to lower electricity and water bills. Features like solar panels, rainwater harvesting systems, and energy-efficient designs contribute to these savings, which are attractive to both owners and tenants.
So it's not just about being green, it's also about being financially savvy.
Hello?
Lower utility bills are a definite plus.
Precisely. And as the demand for sustainable living continues to rise, these eco-friendly properties are likely to command higher resale values. It's a win-win. You're reducing your environmental footprint while potentially boosting your returns.
It sounds like a compelling investment strategy for the future. But what about the broader trends? What does the article predict for the future of sustainable real estate in Thailand?
The article envisions a future where developers continue to innovate, creating even smarter and more eco-friendly homes. Imagine integrated smart technology that monitors and manages energy use efficiently, further reducing costs and minimizing environmental impact.
That's fascinating. So it's not just about incorporating existing technologies, but also about anticipating and adapting to future innovations.
Exactly. And for investors, this presents a unique opportunity to be part of a positive change while potentially reaping financial benefits. It's about aligning your investment strategy with a global shift towards sustainability.
Okay, I'm convinced that sustainable real estate isn't just a trend, it's a smart and forward-thinking investment approach. Now let's tackle the practical side of things. Financing. How do people actually afford to invest in Thai property? The article mentions financing options, but I'm curious about the details.
Financing is crucial, especially for larger investments. The article assures us that financing is indeed possible. Both local and international banks offer a range of mortgage solutions tailored to both Thai citizens and foreign investors.
That's good news. But I'm guessing it's not as simple as just walking into a bank and getting approved. What are some of the things potential investors should be aware of when navigating the world of Thai mortgages?
You're right, it's not always a straightforward process. The article cautions that mortgage rates and terms can vary significantly between lenders. Shopping around, comparing rates from different banks, and understanding the various loan structures available is key.
So research is crucial as always. But are there any specific challenges for foreign investors when it comes to securing a mortgage in Thailand?
There are some nuances to be aware of. The article points out that local banks often provide loans specifically designed for foreign investors, but these might come with higher interest rates compared to loans offered to Thai citizens.
Higher interest rates, that's not ideal. What about international banks? Do they offer any advantages?
International banks might offer more competitive rates, but they typically require more extensive documentation and stricter proof of income. It's a trade-off, potentially lower rates, but with a more demanding application process.
Okay, so each option has its pros and cons. What other factors can impact mortgage rates in Thailand?
The article emphasizes that interest rates in Thailand can fluctuate based on the overall economy and market conditions. It suggests keeping an eye on housing loan growth in the banking sector, as this can indicate trends in mortgage rates.
So it's not a static market. Interest rates can go up or down, which can affect monthly payments and the overall cost of the loan. That adds another layer of complexity to the financial planning aspect.
Exactly. That's why the article stresses the importance of solid financial planning before taking the plunge. Calculate your budget, including not just the purchase price, but also taxes, potential renovation or furnishing costs, legal fees, and any ongoing maintenance expenses.
Creating a financial buffer is always wise, especially when dealing with a significant investment in a foreign country. Are there any other financial planning tips the article offers that could help potential investors navigate this process?
The article recommends consulting with a financial advisor who specializes in the Thai property market. They can assess your financial situation, provide personalized guidance, and help you navigate the complexities of financing options.
So, a financial advisor with expertise in the Thai market could be a valuable asset in this process.
Absolutely. Their insights and experience can help you make informed financial decisions and avoid potential pitfalls.
All right, I'm feeling much more informed about the financing side of things. But now let's dive into the actual process of buying property in Thailand. The article outlines the steps involved, and it seems, well, a bit involved. Where do we even begin?
Don't be intimidated by the process. The article breaks it down into manageable steps. The first and most crucial step, as highlighted throughout the article, is thorough research.
Okay, so research is the foundation. What kind of research should potential buyers focus on before they even start looking at properties?
Start by defining your goals and needs. Determine what type of property you're seeking, a villa, a townhouse, a condo, and the location that aligns with your lifestyle and investment objectives.
So clarity from the outset is key, knowing what I want and where I want it.
Exactly. Once you have a clear vision, the next step is budgeting. This goes beyond just the purchase price, factor in taxes, legal fees, potential renovation costs, and any other expenses associated with buying and owning property in Thailand.
Okay, research and budgeting, check and check. What's next on this property buying adventure?
This is where the legal expertise we discussed earlier comes into play. The article reiterates the importance of engaging a reputable lawyer experienced in Thai property law.
Right. They can help navigate the legal aspects, review contracts, and ensure everything is above board.
Precisely. Having legal representation from the outset is crucial for a smooth and secure transaction.
Okay, legal counsel secured. What's the next step in the process?
Now comes the exciting part, site visits.
Ah, finally. Getting to see those properties in person, experiencing the locations firsthand.
Exactly. Site visits are crucial for getting a feel for the area, the property itself, and its surroundings. It's an opportunity to assess the condition of the property, ask questions, and envision yourself living there or renting it out.
So it's not just about ticking boxes on a checklist, it's about experiencing the property and its context firsthand.
Precisely. And once you've found a property that ticks all the boxes and resonates with you, the next step is making an offer and negotiating the terms of the purchase.
Ooh, the art of negotiation. Any tips from the article on how to successfully navigate this stage?
The article emphasizes the importance of being prepared. Understand market values in the area, have a clear idea of your budget, and be prepared to walk away if the deal isn't favorable.
Knowing when to walk away is just as important as knowing when to make an offer. It's about finding that sweet spot where both parties feel good about the agreement.
Exactly. Once the terms are agreed upon, the next stage involves signing the contracts and making the necessary payments.
And this is where that lawyer we hired comes in handy again, right? To ensure everything is legally sound and protect my interests.
Precisely. Legal representation throughout the process is essential. Now, besides a lawyer, the article also emphasizes the importance of working with a reputable real estate agent.
A good agent can be invaluable in this process. What qualities should potential buyers look for when choosing an agent in Thailand?
The article recommends choosing an agent with experience in the specific area you're interested in. They should possess in-depth knowledge of the local market, have a solid track record, and importantly, be responsive to your needs and questions.
Communication is key, especially when navigating a complex transaction in a foreign country. I want an agent who understands my goals and keeps me informed every step of the way.
Exactly. And the article also stresses the importance of checking the agent's reputation, either through online reviews or by requesting references. You want to ensure you're working with someone trustworthy and professional.
Okay, so we have a great lawyer and a savvy real estate agent on our team. What else do we need to be aware of before sealing the deal?
The article dedicates a significant section to due diligence, both legal and financial. This is essentially a thorough vetting process to ensure the property is a sound investment.
Due diligence. Okay, break it down for me. What exactly does this process involve, and why is it so important?
Due diligence is all about minimizing risk and uncovering any potential issues before you commit to the purchase. The article highlights a few key areas.
I'm all ears. Let's hear about these key areas.
First and foremost, it stresses the importance of conducting a title search. This verifies the property's title and ensures it's free of any liens or disputes.
So it's like a background check for the property, making sure there are no hidden surprises or legal issues lurking beneath the surface.
Exactly. And if you're buying a condominium, the article reiterates the importance of checking the foreign ownership quota for that specific building.
Right, that pesky quota again. We need to make sure the purchase falls within the legal limits for foreign ownership.
Precisely. And finally, the article emphasizes the importance of understanding payment methods. It mentions something called a foreign exchange certificate, which is often required for transferring funds for property purchases in Thailand.
A foreign exchange certificate? That's a new one. I'll have to do some research on that. It seems like there's a lot to consider on the legal and financial front.
You're right, due diligence is a multifaceted process, but it's a crucial step to protect your investment.
But with the right guidance and a thorough approach, it seems like a manageable process.
Exactly. The article reassures us that while buying property in Thailand might seem complex, with careful preparation, professional help, and a commitment to due diligence, it can be a smooth and secure experience.
That's encouraging to hear. So we've covered the research, the budgeting, the legal aspects, the site visits, the negotiation, the contracts, and the all-important due diligence. Have we missed anything?
I think we've covered all the essential steps of the buying process. It's been a comprehensive overview, from understanding the various ownership structures to navigating the intricacies of financing and due diligence.
It's been incredibly insightful. But before we wrap up part 2, I want to take a moment to reflect. What are some of the key takeaways that stand out to you from everything we've discussed so far?
For me, it boils down to 3 key principles: thorough research, meticulous due diligence, and seeking expert advice. These are the pillars of successful property investment in Thailand.
I couldn't agree more. Thailand's real estate market offers incredible opportunities, but it's not a get-rich-quick scheme. It requires a thoughtful, informed, and strategic approach.
Absolutely, and that's why having a team of knowledgeable professionals, lawyers, financial advisors, real estate agents can make all the difference. They provide guidance, protect your interests, and help you navigate the complexities of the market.
So for those who are feeling inspired and ready to explore Thai real estate further, what's the next step? Where do they go from here?
I encourage them to delve deeper into the specific areas and property types that align with their goals and risk tolerance. Contact those experts we've discussed and start building your team.
Great advice. And on that note, we'll wrap up part 2 of our Thailand real estate deep dive. But don't go anywhere just yet.
In part 3, we'll uncover even more insightful nuggets from your research, exploring additional factors to consider, potential risks to be aware of, and perhaps even unearth some hidden gems within Thailand's dynamic property market.
Stay tuned for the final chapter of our Thailand real estate adventure. Welcome back to the final part of our deep dive into Thailand real estate. It's been an incredible journey so far, exploring everything from the allure of Phuket to the complexities of financing and legal processes.
We've certainly covered a lot of ground, equipping you with the essential knowledge to approach this market strategically. But as with any investment, there are subtle yet crucial factors that can truly make or break a decision.
Okay, I'm intrigued. In this final part, I'm eager to uncover any remaining gems from my research. You know, those aha moments that could give me an edge as an investor.
One thing that stood out to me was the implicit emphasis on infrastructure throughout the article. It's woven into various discussions without being explicitly addressed as a standalone topic.
Infrastructure, you mean things like roads, transportation, utilities.
Exactly. And it's a critical consideration. A well-developed infrastructure not only enhances the quality of life for residents, it also significantly impacts property values and rental potential.
So a property might seem like a steal on paper, but if it's located in an area with poor infrastructure, it could become a logistical nightmare down the line.
Precisely. It's about taking a holistic view. Is the area easily accessible? Are there reliable transportation options? What about internet connectivity, water supply, and other essential utilities? These factors can make or break the desirability of a property, both for living and for attracting tenants.
I'm starting to see how easily overlooked infrastructure can be. It's easy to get caught up in the excitement of a beautiful property, but those practical considerations are just as important.
Absolutely. And speaking of practical considerations, the article subtly hints at another crucial aspect: the importance of understanding the local community and cultural nuances.
Ah, yes, the human element. It's not just about bricks and mortar, it's about immersing yourself in a new culture and becoming part of a community.
Exactly. While the article doesn't explicitly dedicate a section to this, it underscores the importance of respecting local customs, building relationships with neighbors, and being mindful of the cultural context. These factors can make a significant difference in your experience as a property owner in Thailand.
It's about being a responsible and respectful investor, not just someone looking to make a quick buck.
Well said. And this leads us to another subtle yet crucial point woven into the article: the importance of a long-term vision.
Meaning not just thinking about the immediate return on investment, but considering the potential for growth and appreciation over time.
Precisely. The article reminds us that Thailand's real estate market is dynamic, influenced by various factors that can create both opportunities and challenges. It encourages a long-term perspective, understanding that there will be fluctuations, but ultimately investing in Thailand's future potential.
So it's about riding those waves, knowing that there will be ups and downs, but ultimately believing in the market's resilience and long-term growth.
Exactly. And that long-term vision should also encompass the potential for personal growth and enrichment that comes with owning property in a vibrant and culturally rich country like Thailand.
It's about embracing the adventure, the challenges, and the rewards of experiencing life in a different part of the world.
Absolutely. And I think that brings us to the final crucial piece of this puzzle: understanding and managing the potential risks.
Right, no investment is without risk. What are some of the things potential investors should be aware of when it comes to Thai real estate?
The article, while generally positive, does address potential risks. One is market volatility. Like any real estate market, Thailand's property market can be affected by economic downturns, political changes, or even global events.
So it's not a guaranteed upward trajectory. There will be peaks and valleys along the way.
Exactly. And another risk to consider is overdevelopment. The article mentions that the popularity of certain tourist hotspots has led to a surge in construction, potentially leading to an oversupply of properties and decreased rental yields in those areas.
So it's about choosing locations wisely, not just blindly following the hype.
Precisely. And then there's the unfortunate reality of scams and unscrupulous developers. The article cautions against falling victim to those who prey on unsuspecting investors.
That's where thorough due diligence, background checks, and legal guidance come in. Vetting developers and their track records is crucial.
Absolutely. And finally, as we discussed earlier, remember the impact of currency fluctuations. A favorable exchange rate at the time of purchase is great, but those rates can shift, potentially impacting your returns when you sell.
So it's about having a financial plan that accounts for potential currency fluctuations, possibly even exploring hedging strategies.
Exactly. While the risks are real, they can be mitigated with a proactive approach.
It seems like knowledge and preparation are the best defenses against those risks.
I couldn't agree more.
Well, I have to say this deep dive has been incredibly insightful. We've uncovered the allure, the opportunities, the complexities, and even the potential risks of investing in Thailand real estate.
It's been a comprehensive exploration, and I believe our listener is now well equipped to navigate this market with a deeper understanding.
Absolutely. So to wrap up our Thai real estate adventure, what's the final takeaway for our listener?
Thailand's real estate market offers diverse opportunities, but success hinges on informed decisions, thorough research, and a proactive approach to managing risks.
Beautifully put. This deep dive has provided a solid foundation, but now it's up to our listener to continue the journey.
Do your research, seek expert advice, and most importantly, embrace the adventure of investing in a country as beautiful and dynamic as Thailand.
Until next time, happy investing.